We're going to do a brief video on T-bond futures, and we've got a daily chart up here for you of the Chicago Mercantile Exchange. The Chicago Board of Trade T-bond futures contract is ZB. This is a continuous contract, and we'll take a look at this and see what's going on. This is not updated yet for today, but I can give you today's prices off a chart I'm looking at here. Today's low is 127 and 1830. I'm sorry, 125 and 22.30 seconds, and then the high is 127 and 18.30 seconds. So this one that we're looking at today is yesterday's low of 123.30. So we have not violated that today. Again, 125 and 22.30 seconds for today. So what we're looking at here is a 5-day moving average in green, a red 20-day moving average, and a 200-day moving average in blue. You can see the T-bond market and the futures contracts have been in the bear market since March of 2022. They have great respect for the 20-day moving average. It's really beautiful to watch the way the futures and the currencies respect the averages. And as you can see, it's respecting this 20-day tremendously. I mean, it's just amazing how those tops are low, one right after the other. There's very few exceptions. And so this is in a deep bear market on the Treasury bonds. Now, the question is, where are we going to catch some support? In a minute, I'll show you some algorithmic trading support and resistance, but places to trade. But on this daily chart, you see essentially going back all the way to 18, there's no support. So let's go to the weekly and see what pops up there. Again, you can see on the weekly, we entered in bear market back here, the same thing, early February-ish, and we're in a deep, hard sell-off on a weekly chart. The red is 20 weeks, and the green is 5 weeks. This is a 200-week moving average. You see it's gone flat, and you see it oscillated around it a little bit here for quite a while, from March until January of 22, March of 21 to January 22. So about 9 months, and then it just tanked. Let's go to the monthly chart and see what we see. I'm looking for some support resistance. Now you can see here a very significant development. This is the 200-month moving average. You can see we consolidated around it and then broke through it. So it's a very negative sign for interest rates in terms of lower bond prices equal higher interest rates. And you can see that this was our low back here in 2020, and we've done nothing but go up ever since in the rate and down in the bond prices. You can see also that we have great respect for the 20-day on this monthly chart as well, which does not bode well for a technical analysis of bonds going forward. So basically, we've broken through a 200-month moving average. I don't really see tremendous support through here anyway, but that's not unusual for the treasuries. You can see it broke through this previous support back here. This would have to be adjusted contract for contract, but 127. So where do I see some support for this? I don't really see support for this until we get down here, this 104 level, but that's a ridiculous forecast. So we'd have to say, you know, 111-ish, 112 is a reasonable number for right this second. I'm not predicting that, but I'm just saying that's not even great support right there. There's a lot of trading and backing and filling going on through here, but you have to get real support across here. You have to get down to the 110 level on a monthly chart. Again, these are adjusted for contracts, so the number wouldn't exactly be 110 because these are futures contracts. But from a monthly perspective and a weekly perspective, you can see we're in a very serious bear market for the price, and interest rates are almost certainly going to continue to go up from here. No big surprise there. So how do you deal with this market? Well, it's really simple. If you're a long-term trader, it's kind of long in the tooth to get short right now and not expect a rally, and that's kind of what we're getting. If you look at this yesterday, we got up to 127.28. Today we're up to 127.18. So this bond market hasn't been putting in a tremendous kind of backing and filling. It's just flat sold off for a month straight. Never a good idea to enter into a market like that and to go with the direction, because it's already oversold in my opinion. So from a straight technical analysis perspective, I would look for this market to get some kind of support here soon. I don't know where that's going to come from, because it's certainly not available from the weekly or the monthly charts, but it's due for a rally. We're getting way too far away from the 200-day moving average, and you'll notice when we got this far away here and here, we rallied. I'm looking for a rally here in this market, probably up to this 134 level. But keep in mind, that's a huge fight, especially with the Fed tightening. You might not be able to get much higher than, let's say, 6 points or so from that low. And so what would that be? That would be about 130-ish. I'd say that's reasonable. So I'm going to put a forecast on here of a rally to 130 at some point, not necessarily starting today from this bottom or yesterday from that bottom, but we're due for a rally in this to probably 130 over over, you know, a 3-week period of time, third week in October, we may be able to see 130. What do we need to do? We need to get this price up and over the 20-day moving average, just like we saw it here. I'm not forecasting a turnaround in the bond market, but I'm saying we need to get some kind of a rally here because it's oversold. We need to get some profit taking and get it back up here to about 130 to get us technically straight again. And in general, that's what this market does. So I expect to see that here very soon. Probably get that rally within the next 3 weeks. Let's go down and see what RBAM research says about it. We do cover T-bond futures, and we have them right here out this morning. Nothing for the buys. We have shorts at 124.24 30 seconds. For the 1 day, this is 1, 2, 8, 5, 10, and 20-day hold pairs for the Treasury bonds. We put out buys or shorts every morning before 7 a.m. and sometimes in the evenings we'll put them out before 6. You just have to check in the evenings before to see what we've done, but definitely before 7 a.m. Monday through Friday. And again, these are out for today, showing a short at 124.24. I don't think we've got there today. Our low is 125.22, so we haven't entered short territory for the bonds, but it is definitely calling for a short position if it gets to the 124.24 and so forth. Now, if you look at the longer periods, the 20, 10, and 5, it looks like we are in those striking range for shorts. You can see everything but the 1 day has been hit for short positions, and you could have made some money in the 20 day hasn't been hit, the 10 day hasn't been hit. So the only one that's been hit is 127.18 is our high for the day. So the only one that's been hit is the 5 day, 126.8. So we'd have to look on an hourly chart and see the market's trading right now at 126.28. So we'd have to see if that made some money. But it is live on the 5 day. Keep in mind these are all for entertainment purposes only, and you have to do your own analysis. You can get everything we put out every morning before 7 a.m. at rbamresearch.com. There's a link in the description below. In addition to the futures contracts I just showed you, we also cover the SP 500, crude oil, and gold, and of course the T-bonds, the major forex pairs, BTC, crypto, and 190 stocks. Everything but the stocks are longs or short every day. Stocks are longs every day before 7 a.m. Monday through Friday. Again, follow the link to rbamresearch.com. Absolutely no cost, no credit card required. You can sign up and get them for free. If you like this video, please click the like button. If you want to subscribe, please do that as well. Please leave us a comment in the comments section if you have something to contribute, especially if you have some comments on our moving average analysis. Keep in mind that that analysis and our entry prices are all for entertainment purposes only. Can't use it for anything other than entertainment. You should always do your own analysis, and you definitely trade at your own risk.